Think you need 20% down to buy a home in the San Francisco Bay Area? The truth is, most buyers don't. In fact, there are several loan programs that allow you to purchase with much less. For example, some conventional loans require as little as 3% down, while FHA loans require 3.5%. Now you may be wondering, what's the difference between these two options? Great question. And since mortgage lending isn't my wheelhouse, I'm bringing in a trusted expert, my friend Kirsten Fordyce with the Platinum Investment Group. Kirsten?
Hey, Darlene, happy to help. Let's start with the 3% conventional loan. This is backed by private lenders like banks or mortgage companies. And one of the biggest advantages, besides the low down payment, is that it's a great option for buyers with strong credit, typically around 620 or higher, and a solid financial profile. Another key benefit, the mortgage insurance, the PMI, is not permanent. Once you build enough equity, you can remove it, which can lower your monthly payment over time. Now let's compare that to the 3.5% FHA loan. This loan is backed by the government and designed to help more people qualify. It's more flexible with credit, often allowing scores as low as 580. But here's the trade-off. FHA loans typically require mortgage insurance for the life of the loan, which can keep your monthly payment higher long term. So in simple terms, conventional loans offer lower down payment and removable mortgage insurance, but stricter credit requirements. FHA loans are easier to qualify for, but come with longer term mortgage insurance. Back to you, Darlene.
Thanks, Kirsten. And one more important thing. While these loans offer low down payment options, they're not free of closing cost. That's something every buyer should plan for. Now, let's talk about another powerful option, the VA loan. If you're a veteran or active duty service member, this may be one of the best options available to you and one of the most underutilized. To break it down, I'm joined by Kelly Cort with Guild Mortgage. Kelly?
Hi, everyone. And to our veterans and active service members, thank you for our freedom. The VA loan allows qualified buyers to purchase a home with 100% financing. That means no down payment, no 20% down, no 5, not even 3% down. Now, that doesn't mean there's no cash out of pocket. There's still closing costs, things like processing fees and title insurance, escrow fees, appraisal, prepaid property taxes, and insurance. But what's really exciting is that sellers may be willing to offer something called a seller's concession that covers a lot of these fees. So instead of needing $10,000 or $15,000 out of pocket to come to closing, you may only need a fraction of that. But the key is working with a team that knows how to position VA buyers competitively. So if you've been sitting on the sidelines thinking you need to save up a bunch of money for a down payment, reach out. We could probably help you sooner than you think. Back to you, Darlene.
We've talked about conventional VA and FHA loans. Now I want to shift gears to cash-strong buyers, those of you who can put down 20%. For you, the question isn't can you, it's should you. To help answer that, I'd like to introduce Elva Wormley of C2 Financial. Elva?
Hey everyone. Most people assume putting 20% down is always the smartest move, and in some cases, it is. It can help you avoid mortgage insurance and lower your monthly payment. But here's what many buyers don't think about. What happens before closing and after you get the keys? First, closing cost. On top of your down payment, you'll also need to cover lender fees, title, escrow, and prepaid items, and that can add up to thousands of dollars. Then once you own the home, there are always unexpected expenses. Maybe the water heater goes out. Maybe you want to paint, update flooring, or take care of repairs before moving in. And of course, furniture, appliances, and everyday life. So sometimes it's actually smarter to put a little less down, maybe 10 to 15%, so you're not draining your savings. Yes, your monthly payment might be a bit higher, but you're covering your closing cost and keeping reserves in place, which gives you flexibility and peace of mind. Because at the end of the day, A home should feel exciting, not stressful. Back to you, Darlene.
Exactly. The smartest strategy isn't always about putting down the most. It's about being prepared before, during, and after closing. And if you're thinking about buying and want to help find the right approach for your situation, I'd love to guide you through your options. I'm Darlene Perry, your San Francisco Bay Area Real Estate Connector. Give me a call.